Hey guys, Whitney here. Thanks for joining me today. If you would jump over to the chat box and let me know if you can hear and see me, because nothing's worse than getting partway through this presentation and then people go, I can't hear you. Also, that will be where that chat box will be really invaluable to you as we go through this presentation. So you can, drop any questions in there. I'll do my best. Thanks, Bridget. Yay, you're here. I'll do my best to answer my questions as I can in line with the presentation, but I'll also, clean up any questions at the end. When we get to the end of the presentation, we'll open it up for kind of like an Ask Me Anything session. So, go ahead, drop in whatever question you have regarding syndication deals. But if this is your first time attending one of these, how to get started as a passive investor series, welcome. These series are for you if you have ever tried to invest in syndications before but got cold feet, or you invested in syndications before but you realized you made a mistake, or you're just so overwhelmed by all the information out there that you're just in complete overload. So again, these are for you. And today's going to be a little uniquely different. We aren't going to talk exactly about syndication, but how do you make that transition? Say if you were investing in single family investments or small multi, and you want to make that transition into multifamily, like what are the pros and cons, advantages and disadvantages to making that switch? But before we get started, just a little bit of background about me. Here's me and my crazy family. I actually should put in a picture. This is last year in Mexico. This year, because of COVID, we have not left the country. So we decided to winter in Sedona, Arizona. So we've been playing for the past few weeks and have a couple more ahead of us, playing on the Red Rocks, playing in the sun in the desert. But this is the reason why I invested in multifamily and syndications, is so I can spend more time with my family and with my daughter. And now I get to help teach her. So it's been definitely a whirlwind of a 2020 year for us. But for us, we started off with syndication, or excuse me, with small multifamily investing. And I think this presentation today really hits home for me, because that was where we needed to start, was with our single family investing. That's what we had access to as far as capital and deals. And I was actually able to scale a portfolio to about 30 single family houses. And we had enough cash flow coming in to where I could step back from my profession part-time and spend more time with our daughter. And as we realized that and put the pen to paper and crunched all the numbers, it dawned on my husband. He was like, hey, I want that too. And at first I was like, yes, he's coming to the dark side with me. Like, we're going to be able to go on this adventure together. And then I quickly realized, quick calculation in my head meant we had to get to 80 units in order to get him out of his day job. And I'm like, oh boy, that is going to be a challenge for me. And so anyways, we, over the past few years, we've made that transition into multifamily world. With Goodegg Investments, just fast forward 2.5 years later, we have over 26 properties, 6,700 multifamily units under management, and then also an $800 million portfolio value. But what I get to do here on a daily, weekly basis is work with you guys, our investors, and we have we've grown our verified investor pool to over 760 and counting, and our repeat investors is pretty astounding. So I'm super happy about that. And even in the middle of 2020, we've been able to do some incredible things, like put out our books, start our podcast. Even at the beginning of the year, get to meet with many of you at different conferences, see some of our properties, and meet with many of our operators. And if this is, I'm gonna let my internet catch up. All right, there you go, guys. Just a quick recap. This is one of many videos in this series. So make sure you look out for the recap, email, especially if you're interested in one of these other topics directly related to syndication and investing. There's over 30 videos to date now. These are just a few of the topics that we've covered. So make sure that you are diving into that series if you have any questions. All right, let's get started. What are the advantages and disadvantages of single family residential investing versus multifamily? Okay. Because again, many investors that I talk to actually have invested in single family resident, either a rental before, maybe a vacation rental, or maybe you've taken your primary and made it a rental, or maybe you just have your primary. So a lot of investors are really trying to look through that transition to syndication investing through that lens. So let's tackle that. All right, but before we get started, these webinars are for education only. Remember, even when we get into the Ask Me Anything Q&A section, we are not a legal, financial, or tax advisory firm. So make sure that you're consulting with all of your professionals should we have a question in that arena. All right, so single family, let's tackle that. All right, so single family, I am not knocking any investment strategy. Single family has some real advantages to it. It's easier to get started, right? You're buying one unit at a time. It does not cost that much money to get, respectively, to get into a single family investment. Say like you're purchasing a property in the Midwest, you might only need $20,000 to $25,000 down to access lending to purchase, say, a $100,000 to $150,000 property. So you can purchase one unit at a time. The other reason why I really like single family investing is because you have multiple exits to that property. Once you purchase a property, say you hold it for like 3 or 5 years, or ready to sell, you could potentially sell that property to a retail investor, a first-time homeowner. You could actually maybe keep the tenant in there and sell it to an investor. You could, continue to hold it as a rental, or maybe you can do some unique things like put a lease option on it and sell it to your tenant. So there are some really cool things that you can do with single family. It's also a little bit easier to diversify your markets with single family because you're only buying one unit at a time. You can actually achieve greater diversification with your money. You can also diversify your operator, okay? And the operator, when you're working with single family, is going to be your property manager, right? When you're thinking multifamily, especially in syndication realm, the operator is going to be us, the general partners, all right? Also, lending is a little bit more attainable for a single family property. You could utilize conventional lending. You can utilize private money. You can utilize hard money. You can utilize commercial lending and portfolio lending. Okay, so lending options are a little bit more attainable for single family investors. And it's easier to for people to wrap their head around because they've purchased a primary property before more than likely. So that tends to be a familiar experience for them. Now, I can tell you, with my 30 properties, there are some real disadvantages to having single family. I have 30 roofs. I have 30 water heaters. I have 30 HVAC systems. I have 30 foundations to maintain. So it can actually be CapEx, my capital expenditures can actually be pretty darn high on these assets, okay? Also, my expenses tend to be higher because I'm not able to leverage scale in order to drive down my expenses. Now, I can actually drive down my property management expense just a little bit, but I've been able to drive it from, say, like 10% down to 7%. I can't make that leap down to 3 or 5%, okay? So my expenses, like property management, like taxes, tend to be much higher on these type of properties. All right, lending, all right? If you're investing in single family properties, you probably at some point in time will get capped on how many loans you can get. And that is if you are using your conventional spots. So right now, investors can access 10 what we call golden tickets, conventional spots. Now, if you are married or have a spouse, you get access to 20 because you can use your spouse's credit as well in order to purchase property if each person can individually qualify for the loans, okay? Now, in a spousal relationship, oftentimes I find both the husband and wife are on the title together, or the spouses are together on title for the purchase of the primary home. So that means their probably golden ticket spots are reduced to 18, okay? Because that primary would count against each one of the spouses. But that doesn't mean you're done. right? It just means you have to be able to switch your game plan and maybe go after, say, like a commercial lending situation, all right? All right, now I'm gonna touch on this and then I'm gonna dig into it further on the next slide. But another disadvantage to single family investing is that it's actually pretty hard to control the growth of the asset, all right? The value of the asset in a single family home is based on what we call a comparable sale. So that property is only worth what the guy next door sold his for in the previous 6 months, okay? All right, so that actually doesn't work all the time in an investor's favor, okay, because they can't actually control the actual growth on the property. All right, now let's talk about multifamily, all right, because there are advantages and disadvantages as well in multifamily investing, all right. Some of the advantages that I really love is that you can get more units with one transaction, all right. I have to get, if I'm buying single family properties one at a time, I've got, 30 loans, okay, for my 30 units. Or I could go buy a 30 unit building, okay, and have one transaction and close on 30 doors, all right. Also, I can control the NOI growth, right? What we talked about here in this last point in single family investing, that it's hard to control value. I actually have a much, I have a lot more control in the multifamily realm, depending on how I buy, because I can control the NOI, the net operating income growth. And if I can control the net operating income growth, I can control the value of the property. So if you guys have stuck with me on previous Goodegg Live Masterclasses, we have gone through the math of how the cap rate and the NOI work together to drive growth on a property. Okay, but I'll recap that here just real quick. I can add to NOI growth by being able to control the rents, raise my rents more on multiple units in that property. I can also rework the profit and loss statement, okay, to capture operational efficiencies, say move utilities back to the tenant, rework my vendor contracts, maybe even move my property management to reduce my expenses. Okay, I can increase my rents and I can decrease my expenses on a single family property. Here's the trick. It does not affect the value of the property though. That is the problem, okay? The real kicker also with multifamily is that I can actually add additional streams of income to the property and create real value here. I can add washer and dryer units, storage lockers, package lockers. If it's a larger property, say like 100 units or more, it might make sense for me to include valet trash or a fiber internet service like Gigafy. I can add additional streams of income, and that again grows my NOI, and divided by the cap rate, I can control the value of the property. It is very hard for me to add additional streams of income to a single family property, or even maybe a small multifamily property, and it certainly does not impact the value of that property based on how it is valued on that comparable sale. All right, it's also easier for me to leverage a team with multifamily, okay? You're gonna be, it's more like investing in a commercial business, and you're gonna be able to leverage more people. Now, if you're doing this active investing yourself, you're gonna be able to leverage your realtor, your lender, your property management team to help you manage the building, right? You're probably gonna have all these things in place. Oftentimes what I find with single family investors, they're trying to do it themselves or maybe work with like 1 or 2 property managers, right? Who just have like a small team with them. All right, now there are disadvantages. And if you notice, a lot of the advantages or disadvantages with single family are advantages with multifamily, and we're flipped, okay? As far as like the advantages of multifamily are now the disadvantages, or excuse me, the advantages of single family are now disadvantages of multifamily. Our exits, remember our single family investing, it had some flexibility, right? I could peel off 1 unit if I wanted to get rid of it. In my 30 unit portfolio, I'm going to peel off 4 in 2021 and sell them. Okay. I can't do that if I have a 30 unit building. I can't just sell 4 of the units. So my exits tend to be more limited, okay, and lengthy, right? I also, I'm not going to be able to sell it retail to a first time home buyer. My investor pool has shrunk on who I can sell it to. All right. So again, I'm not going to be able to do a lease option to my tenant. All right, so again, I have limited my exit strategies and it takes more time to find that buyer. Also, if I have 30 single family properties, I can maybe scatter, 10 in 3 different markets. Whereas if I have a 30 unit building, I lack the diversity in markets. I just have one market. Okay, I also have a lack of diversity in my operator, right? Again, just much like if I have 30 single family houses spread out over multiple locales, I have 3 different property managers, okay, 3 different operators to work with. Again, advantage, disadvantage, well, we can wait and see about that, but I lack the diversity of that in multifamily. Also, lending is more of a hurdle for people getting in the multifamily world because you have to have a track record, okay? Now that track record does not have to be your own, okay? You can partner up with somebody in order to borrow their track record, or in the case of syndication, you're accessing that deal utilizing our track record, okay? But if you're trying to buy a multifamily building yourself, that lending piece tends to be more of a hurdle. Also, your lending options have shrunken a little bit, but you still have you can still access conventional lending through Fannie Mae, Freddie Mac, but underwriting is a little far more stringent. You still have hard money lending in the case of a bridge loan. You can still have portfolio lending. You can still have other commercial lending options. All right, in multifamily, okay, I would say in multifamily and single family, the tenant is critical. You have to have a great quality tenant, but it's even more critical in a multifamily building because one bad apple can actually affect multiple units. Whereas if you have one bad apple at one of your single family homes, they're not really going to affect the other properties. Okay, so your tenant base is super, super critical in multifamily. All right. So we talked about the advantages and disadvantages. Now, how do you make the move, right? How do you start thinking about how am I going to, maybe jump from owning 1, 2, 3 single family houses into multifamily? Okay, making that jump from like 2 single family houses into buying a 50 unit may not be achievable. How do we make that happen? Well, there's a couple different ways, and I'll give you a couple different ideas. With single family, if you're going to do this yourself, you can do what we call the stack. Maybe you have a single family residence that you already have, or a rental already purchased, and then the next purchase is a duplex. Okay, then the next purchase is a quad. All right, now I have these on one line because these 3 you can access through conventional lending. Okay, so you already potentially have, let's see, it's like 7 units under your belt before you jump to commercial lending at an 8-plex. All right, so again, you've built that track record for yourself, which is awesome. And it's not a hard stretch for the lender going, well, they already have 7 units here. Sure, I can lend to them on an 8-plex. All right, they've been successful with the 7 units. What's one more? Who cares? All right, so you can jump to an 8-plex and then maybe a 10-plex. Or if you're going to do a true stack, you go 8-plex, a 16 unit, then a 32 unit, right? You can scale up really fast with each transaction. All right. Or you can use a more leveraged route, okay? You can actually start with the single family investment. This is what I do. I have my single family portfolio. I just continue to peel off the equity and the income from the portfolio, and I just redirect that into passive syndication, all right? I use my single family portfolio to, it's kind of like I joke around, but it's really true, a little mini ATM for me to fund my syndication investments. That's another way that you can scale into multifamily. By doing it this way, I personally am not the one doing all the legwork as far as finding the asset, managing the asset, securing the lending and stuff like that. I'm working within a team in order to get that all done. And if you're a limited partner, you even get to leverage that much further, okay? Or you can skip the single family investing altogether. Maybe your highest and best use of your time is in your primary job, right? That's, a lot of times when I'm talking to investors over the phone, they feel like they need to actually have like a rental or 2 under their belt before they invest in a syndication. You don't. However, you know, when we're talking, we're just like, hey, the highest and best use of your time is in your high paid profession or your tech job or whatever that is. Why don't we think about a strategy to utilize that active income, you know, in your job, and then redirect that into syndication investing? Okay, skip the single family, skip the stack, skip the single family altogether. All right, so I'm going to take a big pause, a drink of water. And again, this presentation is mostly to kind of help you understand the advantages and disadvantages of owning single family or small units, and owning larger units if you're going to do this actively, and where syndication can fit into this puzzle. If you got questions, jump over to the chat box and let me know. Also, you know, I just want to put in front of you guys, if you are interested in investing in syndications and you haven't done so already, make sure you apply to the Goodegg Investor Club. When you apply, you can also schedule a call with me. We have to jump on a call. If you want to get more deal flow, you have to apply. We have to jump on a call together, and we can share with you our investments that we're working on with Goodegg. And if you're curious of what the Goodegg Club's about and who it's for, well, it's for anybody who's interested in syndication deals, whether you're starting out or you're a pro at doing this, you're doing this on the side, or you haven't invested in a deal yet, or you're doing this full time and you've invested in several deals. The Goodegg Club is for you. So make sure to go over to goodegginvestments.com/invest. You can fill out your application there, and then we can hop on a phone and get to know each other. All right, guys, jump to the chat box. I would love to know your questions. What's your outlook on the rental market for 2021? Ooh, I love the crystal ball questions. I don't know. I really don't know. So I think a lot of that, you know, I'll give you some of my opinions, personal opinions on that. I think that, you know, when we looked at 2008, and there was a lot of disruption with people owning their own homes, there was a wave of foreclosures that happened. People had to rent, okay? And so I feel that rental markets are going to continue to stay stabilized for two reasons. One, I think we will see some foreclosures come. And two, there's an undersupply of housing, okay? And so in 2008, there was an oversupply of housing. We're in the exact opposite situation right now. There's an undersupply of housing. So I think it's, we've got high asset prices. We've got potential for foreclosures coming. You know, going into the spring, it's not exactly healthy for people to condense households like they did in 2008. I think the rental market is going to continue to stay strong. Now that is going to be locally dependent. We have seen softening of rents in, say, the Seattle market. I think I've heard some grumblings about San Fran as well. I'm not too familiar with that market. I think the thing that I would keep an eye on right now are the tenant landlord laws, especially if you're single family or small multifamily investor investing in a tenant friendly state. I would keep a good close eye on those laws for sure, because I think we're going to see some changes come down, and I think it's going to be swifter changes in those markets that are already tenant friendly than it will be in ones that are more landlord friendly. All right, what other questions do you guys have? Jump over to the chat box and let me know. All right. And, you know, for those of you who are just here to, you know, pick up a quick tip and you've got to bolt to your next appointment, thank you so much for investing your time today. It was such a pleasure that you, and an honor that you spent it here with me, your most valuable resource. This is how you can get in touch with me, Whitney at goodegginvestments.com. Again, I'm going to hang out here for a few more minutes and answer any questions that you guys have.